So the weekly trade this week, I'm going to be tweeting it out tonight, but it's likely to be whatever price. It's going to be towards 83.5. Okay. Actually, just remind me there's something I want to say about that, about how to enter into the weekly trade, because I don't think I've actually ever talked about it. Now, what could happen? This level over here, this daily level over here, didn't get touched over here.
Mm. Uh-oh.
The charts don't like that. It does not like that. So we have this unmitigated level over here that hasn't been touched, and we have this level over here that has not been mitigated or annulled by the wave. So our weekly wave right now is at 73.7. It's so close to 74, but it ain't 74 yet, my friend. And you'll remember a couple of weeks ago I was saying that sometimes these waves will coincide with the mitigation line exactly at the time where the price hits it. There's something about the Lord of Liquidity, may his rule be long and lasting, that has these coincidences, these synchronicities, these 11:11s that happen exactly at the time they need to. So there's something about it that I've been calling for a liquidity jump around basically April 7th, basically by tomorrow.
And by the way, that wage is the moving average, right?
Their volume weighted moving averages.
I mean, waves, right?
Yeah, these waves on my chart
Mhm.
are volume weighted moving averages of specific lengths.
Gotcha. And
Um,
you're saying that once that volume weighted moving average crosses past the VWAP level, it eliminates and annuls that level and it's no longer pulling the price. But until then, that VWAP level is calling the price down,
yeah,
essentially.
it's no guarantee that I'll stop it, but it makes it a bit highly unlikely that'll occur. I mean, at some point the price will cross below there, just like it does in every bear market. At some point it will. So let me just correct what I'm saying. Like over where is it? No, bear market over. So over here, we we did cross below, right? So if something like this happens where it bounces off the yearly thing, but then we don't actually make all-time highs and we actually break below it, well, you're not going to have me say,
Right.
I'm going to say now we're entering a bear market. If we close below, I'm going to say we're going to enter into a bear market, right?
Yeah.
And so even though we bounce around here until we actually close above here, which we never did. In fact, I think, do you remember, Peter? I think when this happened, I was shorting from over here.
I can't remember.
From our group. I have to go back over there. Yeah, I shorted a bunch of this thing down over here. If we don't, if we don't close back above it, then we're still in a bear trend. In the same way that as long as we don't close below it, it's still bullish. So like all over here, it's still bullish, still bullish, still bullish, still bullish. These are all dips to buy until it fails. So I'm not trying to say it won't go down there. I'm just saying until the price until the price closes below this level, it doesn't mean anything.
Gotcha. All right.
If it does, you'll see me change my tune. But what's great for us is that we can make money in the bear market too. All the same things that we're talking about is the same thing. I don't actually need Bitcoin to get to all-time highs. I'm actually not even very enthusiastic about that. Let me just be clear about it. Because when we're inside of blue sky territories, my levels don't print. So I just gotta sit around hoping for a pullback or whatever for something to happen, right? When this whole thing happens here, there are no levels, right? There's no levels being triggered over here. It's all blue sky. But once we retrace down into this area, oh well, now Tommy Boy's got all kinds of levels to deal with. So we'll make money in a bear market. We might even make more money in a bear market because of how much more violently it goes down. You're not going to be sitting around waiting for that. And whereas we don't yet have a tool, I mean, I do have one coming, but I haven't publicized it yet to mark a top. Um, the closest thing we have right now is our liquidity tracker. We do know roughly where the bottom will be because our wave levels do a good job of pinpointing where a bottom might be for the cycle. But that's for later on. For this week, what we want to be paying attention to is the idea here that we could absolutely get down to this level. Let me go back over here. We can absolutely get down to 76.4 or even 74 by tonight. Totally possible. So when do you enter the weekly trade? Don't enter the weekly trade as soon as this candle closes. You could, but there's a risk of that. Very often, on the first day after the weekly trade, there's a dip if we're moving up, and then the opposite for the other way around. So just to show you again over here, so for example, over here, this is the weekly trade, the weekly close of the candle, and there's a dip below. Over here, here is the start of the weekly trade, but there's a dip to the there's a dip to the in the first day, which then you would take. Over here, this is the weekly close. There's a dip, and then this is the dip you would take in order to move up towards this weekly level.
So how to enter the weekly trade means.
Oh, I can't really hear you, Peter.
Carry on.
Okay. So that happens fairly regularly. It's no guarantee. So often you've heard me say before that I'll often give myself, depending on how much room there is between here and the weekly trade, I'll often take as much as 3 hits to get there.
Mm-hmm.
So I'll often take the first trade at 10 o'clock when the candle closes, then again at a low, and then again higher than that, or again later on if there's another low during that day. The issue is that when there are nearby of these levels, that's usually where you want to be entering at. So I would be setting a limit order buy over here and a limit order buy over here, assuming that it happens within the day. And then that would be the trade up to our daily level here and our daily level over here. Does that make sense?
Yes, it does.
Okay, perfect. And then the thing after the weekly trade happens, I mean, if it doesn't happen, we keep on falling lower and we close below this level and we confirm it, then we're in bear market territory. We're gonna have a different tune, but until then, we can't count on that. And we're also going to have a bunch of daily levels that are going to show up that we can trade. I try to do revelations during the week just to let everybody know when those things are happening. If there's like good setups to pay attention to, like we did last week. So we'll continue that this week. But you can also use the indicators yourself and figure out what kind of trades might be best for you. The last thing I want to say on this is liquidity. So liquidity indication. Remember, liquidity is a lagging indicator. Sorry, it takes about 12 weeks for liquidity to bleed into the system. And so this liquidity that we're seeing here projected into the future has already been done. That liquidity started being injected in January 2025. This liquidity here, January 2025, when it started going in, has already started to happen. So we're just going to be responding to that. And if we take a look at the dollar, let's take a quick look at the dollar over here. You'll notice that the dollar went off a freaking cliff, which adds to liquidity.
Right.
Okay. So if this was going the other way, then I'd be like, ooh, now I'm really nervous, but it went off a cliff, and that's happening. So we'll see what happens there. But right now, the narrative of Bitcoin still making new all-time highs, it's still totally possible. Especially since what we just saw happened during OPEX. It happened during a period of weakness that we were expecting. People weren't hedged. There's all these dynamics that come into play. So we'll see what happens over here. But as long as we stay above this yearly trend, all these levels that we reached down here to me are bullish and they're to be bought.
So you're feeling confident about all-time highs, or?
Well, there's nothing to be confident about. You just read the charts. And if the charts are in your favor, if the bullish trend has not been negated, well, then you treat every low as a buying opportunity. I don't understand what's so hard for some people to get for that every one of these freaking dips were times to buy. I don't. Everyone looks back on the chart and go, obviously that would have been the perfect time to buy. But you know where everyone bought? Clearly here. I just don't understand how it's so easy for people. If over here, if I tell them to sell, they go, "What are you talking about? Sell?" And then these dips, I go, "I don't understand. What is it that you don't understand? It's the dips that you buy." The Michael Saylor chart that we saw that's been floating around recently, where he shows all these are all our buys. People were laughing like, "What? You only buy tops? What is this?" Okay. Anyways, so this thing is to me is still in play. Plus, the last thing I'll say on that, if we take a look at the liquidation charts, so we just take a look at liquidations here.
Oh, your favorite liquidation charts. It's not a Sunday fuel unless we talk about liquidation charts. Where is everybody? On what side of the seesaw are they on?
Well, look at that. It's 4 billion for this is the Binance BTC USDT pair. So it's not everything in all of the markets, but it gives you an idea. And you're looking at people all the way up to 100x leverage that are massively short. They're short by four point something billion dollars. They're short by four point something billion dollars, and they're long by like 40 million. If you take a look at the Bitcoin exchange on Binance OKX on a Bybit over the last 30 days, you'll see again it's 10 billion short and 72 million long. Peter, let me just make this perfectly clear. The 10 billion shorts, in order to make the money off the shorts, have to buy back $10 billion worth of the asset.
Mm.
There's no other way around it, right? The shorts have to cover their shorts, and the longs have to close their positions. And when they do, it adds that many dollars to the other side. That's why you want to be one of the first people to close out your positions if you think that the whole wave is going to happen the other way, because you get a short squeeze. We all lived through this with GameStop and AMC. I don't know why people don't understand that. Back then, it was like all the charts saying record short positions, open interest. They're borrowing things in order to short against the GameStop or whatever. And the whole plan was to just wreck that whole thing. Well, short squeezes happen all the time once the shorts get liquidated, and it's way harder. It's harder for shorts to make money because a chart can go up infinitely to the right and it can only go down to zero. That's why you'll generally have more people on the long side than on the short side. And when you have this massive $4 billion versus millions of dollars, that's literally an order of magnitude, people that have to cover. They have to cover at some point. So unless you think they're writing this down to zero, they have to cover. And the more that the shorts end up being in profit, and longs become less in profit, less people take longs, more people take shorts. Then what happens is that you've exhausted the number of people to sell to, right? And the number of people who would sell. And then it's everybody on one side of the boat. So then what happens? It sinks. And when that sinks and the buyback stops, as the buybacks happen, the more the people go, well, I don't want to lose out on the gains that I've had on my short. Let me cover it. More people do that, and then it gets up to the level people go, oh my god, I'm gonna go negative if I keep holding the short. They sell it, and then the people were like, oh my god, I just completely blew up my account because I thought it was going down and I was too nervous and I just left the whole position. They also get liquidated up and then go all the way back up. And we don't have time to talk about it, but if we actually took a look at the liquidation charts, you'll notice that the dips there, so after the big levels, the dips that happen over there, what do you think they correspond to? I don't know, VWAP levels. Here, I don't make the future, I just see it. That's what it is.
Well, it's fantastic. Upcoming events.
So we don't have a earning season is coming up, so we'll see what happens there. That usually affects equities, so I'm not so worried about it on the crypto side. Fully expecting a market top in Bitcoin by like latest June, July. I think that's the cycle top, and we're going to be looking for shorts after that. We don't take directional bets other than what our charts are telling us. Please don't think I'm saying that you should front run it. I'm just saying that I would expect that to happen. We'll take a look at our liquidity charts. We'll take a look at what the positions are, but I would expect to begin for that recession and then see it really big drop in September and just ride that all the way down to the end of the cycle, which takes about a year. And then we'll be buying back in at around, I think right now it's at like 42,000. When we get there, we're going to be buying with both fists as our levels are telling us. We reach the low of waves and we're going to ride it back up to $1 million per coin. And that'll be great. But use this time and use the next bear market as a exercise for practicing this 50x leverage type of trading that we're talking about. Um, you're not going to find it in a bunch of other places, and you're not going to find tools that I think are pretty freaking clear, and that get better over time as more and more of you participate and give me your feedback. So it's great times to be in. That's the events I want to take a look at. As the tariff thing, it looks like it's been settled. Look at the promise. Basically, this is what the tariffs are going to be. So we're not going to expect a bunch of volatility after that. And so I would not be surprised to see a bunch of money that come back into the markets. Why wouldn't they? Why wouldn't they want to come back when it's 20% lower? Can you imagine you sold at 5% down and you get back in at 20% afterwards? You're a genius. Why wouldn't you want to do that? So we'll see. Those are the events I'm looking for. There's no other major things that's on the calendar.
Once again, to make it clear to you degens out there, we got a degen right here, just so you know. He knows what he's talking about. These signals, these indicators are free. All right, and so if you if you want to be able to see these charts, look, I'm a amateur, I'm a nothing, I'm a nobody. I look at these charts now and I understand what's going on. If you want to dispel the mystery, if you want to get this power from Sacred Prophet, you can sign up to this. Very soon it'll be launching, but you can contact him on X, Sacred Prophet on X. But these things, I want to make it clear, it's free. You have to sign up and put Tom as an affiliate on your BitGet, is it?
BitGet and some other exchanges, but BitGet is what we're focusing on.
But even if you don't want to do any of that stuff, I recommend that you take a look at some videos on his YouTube channel, Sacred Prophet on YouTube. Even if those trades are gone, we talk about the markets. Tom gives you an education. It's very, very useful for you to look at that stuff. So you don't have to look at all the videos. And if you like and subscribe, you'll be privy to more as we go forward. But there's a wealth of knowledge there. You can also find Tom on Traders Post YouTube channel. Tons of information there. Fantastic stuff. Tom is in love with this. I'm in love with this. We want to educate the population. We want to give you the tools that can make your trading journey better. Why? Because Tom has felt the pain. All right, the terrible, terrible pain that caused him to want to understand what he did wrong. And what you see here is the birth of the culmination of that process. So, Tom, Sacred Prophet on X, Sacred Prophet on YouTube. Follow us along and get those magical lines on the chart so that you can see the blonde, brunette, and redhead, because the matrix looks beautiful when you know what you're looking at. Tom, everybody's going crazy. It's exciting. I think it's really cool. Do you think people should panic?
Yeah, panic. No, never panic. Find the opportunities that are there. If indeed the bullishness is still there, you want to be buying. And if you think the sky's going to fall and you want to capitalize on that, then short. But express your idea, get it clear, and put it on the chart and make money from it. Just worrying about it, it's not going to make any difference whatsoever. Don't do what I did and just watch all your hard effort evaporate into the air. Take accountability, put your bets on, be safe about that, and reap the profits of your calmness, not your orderliness, not the panic.
And the good thing about what you're offering here is that 50x leverage means you don't have to put as much in to be able to get more out.
That was the most important thing to me. That um, it's hard to beat the markets with anything but leverage. You're not really going to find an edge. I mean, you could. When I was hunting altcoins, sure, that was great. Get into Safe Moon, make some money, ditch out. But that to me is like a full-time thing, and you're betting on sentiment and what's the flavor du jour and am I on the right blockchain and all that, and it can be difficult to do that. Leverage is the way that all these financial people use in order to make oodles of money. It's leverage they're taking out. Hedge funds and institutions and pension funds is leverage that they're using, and so knowing how to use leverage properly and where and what levels and following along with the institutions is the way to go. And so if you don't trade with 50x leverage in order to take advantage of the 2% move, well, then you got to put in 3 million to make it worthwhile, 100,000, a minimum on the low end, 100,000. I don't know. You get a risk of $100,000 in order to make $2,000. That seems to me like sort of, get better entries, put in 1/50th of that, and then also make your $2,000 off the 2%. To me, or off the move. I think that makes a lot more sense to me.
Get your feelings out of it, folks. Your feelings. The charts don't care about your
No.
feelings.
You put on your half a trade, and then you walk off.
That's what
I'm
I mean.
surprised at my feelings.
That's
I
what I
can't control
mean.
my feelings. I can't control it. I feed it a little
No,
bit. Here's a little taster.
but that's what I'm talking about, right? Risk mitigation. The risk management is how much are you willing to lose, not how much you're willing to gain. So all you people out there with FOMO and freaking out, look at the charts, express what you believe, use 50x leverage so that you don't have to put it too much of your money in, but you can get the rewards even on small moves. Chill out, okay? Relax, because trading can be, I'm told, fun. All right. Now, apparently, it's not fun for a lot of traders, but it can be, and it's becoming more and more fun here over at Sacred Profit.
It's as fun as war is.
What?
You don't fight for the war, you fight for your brothers. Right? That's sort of camaraderie. That's what you fight for. I'm watching Daredevil right now, and that's what the Punisher
Oh, I
does.
see. A daredevil.
Yeah.
Okay.
Because when I was on the front lines, like that's not when I was afraid. I was afraid when I got on the plane back home. Yeah, that's how I feel. When I'm not training,
All
that's
right.
how I feel bad. When I'm in the markets, I feel pretty good. Am I the Punisher? I think I am.
I think you're more like Bane. I was born in the darkness. All right.
That's it for us. We'll be back next Sunday with another Sunday Fuel. Until then, happy trading.